We've got some breaking news now regarding Robinhood. It has released its S-1 filing for when it goes public. So we're starting to learn just what that highly anticipated IPO is going to look like. Here's what the ticker is going to be: Hood. HOOD. Jared Blikre had a chance to quickly comb this S1 filing. He joins us now. And Jared, I know there was talk before the release of this S1 filing that Robinhood would set aside up to 35% of its shares for retail investors to get in at the ground level as it continues to try to democratize this whole process. Is that what wound up happening?
Yes, it looks that way. And that's a very high percentage. Usually the bulk of the shares go to the friends and family and the institutional clients of some of the brokers and the lead underwriters. That would be Morgan Stanley, Goldman Sachs. So in the vein of trying to democratize finance, I think this is a great thing that's come to market here. And it's an idea that other companies are doing as well. However, this comes a day after a record $70 million fine by FINRA. We've been talking about it. I've expressed my skepticism that all their ducks are in a row right now. But let me go through some of the numbers that I'm seeing in the document right now. The net cumulative funded accounts, that's 18 million accounts. Monthly active users, 17.7 million. Assets under custody, 81 billion. And Robinhood customers who are first-time investors, that is over 50%. And I think that's a key statistic here because we got some numbers out of the FINRA order, consent order and decree, that came out yesterday that suggests these are really rookie traders. And it's all the more necessary to make sure that they have the investor education, that they're suitable for the accounts. And I'll end my spiel there. Let me go through some of the headlines that are coming here. So for 2020, their total revenue was $959 million. That was last year. That was before GameStop. Think about that. Versus $278 million the year before. So that would be 2019. Just gives you an idea how fast they are actually growing. And I would expect those numbers to accelerate and show acceleration in that first quarter. Also, some other items that I'm reading here. Net income was $7 million for 2020. So that's a positive statement. That means they're profitable. Coming into an IPO, having a new listing that's profitable, as we know, is pretty rare today. We'll have to see if they can keep that up because we know that after GameStop, there was a lull in trading. So maybe the second quarter numbers not up to snuff as much as the first one was. Just looking at a couple more headers that are coming out. For the quarter ended March 31st, total revenue coming in at $522 million versus $128 million a year ago. And we can also see that Goldman Sachs, Citi, JP Morgan, Barclays, those are the underwriters. And one of the risk factors addresses regulatory proceedings. And that could cause substantial costs. We know they have to pay FINRA $70 million. They also have several investor lawsuits pending, and there could be other government probes because they've had outages this year. So that is one of the lead risk factors that I'm seeing. Still digging through the numbers and the prospectus here, but we will be bringing you all the latest right here on Yahoo Finance.